This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Sophie Liao, founding partner at Oyster Ventures. Oyster Ventures is a seed stage focused venture fund based in San Francisco, New York, and Hong Kong. They target companies that bring liquidity and efficiency to antiquated industries and with massive potential to scale. Sophie, thank you for joining us.
Thank you for having me.
Great. So tell us more about your background before investing in early stage companies.
My background is I started off as a documentary filmmaker and covering the world of technologies, and that's got my interest in technology building and as well as later on investing. So how I got my foot in the door is a rather interesting story. I used to work for a visual effects technology company and then later inspired myself to start a company in the VR software stitching industry. And then I got really lucky, sold my company within 6 months to a large media vendor. And that's kind of my foot in the door in Silicon Valley because the local VC fund, Rothenberg Ventures, gave me a ticket to be a VC. And I started there. Later on, I was a venture partner at DFJ Dragon. Fast forward in 2017, I started my own fund, Oyster Ventures. Now we are the Fund 3 team of 8.
Great. So what excites you right now?
Fintech. Anything provides liquidity and efficiency to the traditional world that I think me and my team are very excited to see. Yeah.
And what about fintech excites you as far as any particular sector, payments, disbursements, or otherwise?
Across the board. So starting from 2016, we spotted the trend of 4 major trends that to summarize this. The first one is we as venture capitalists are always looking for the next innovative ideas and groundbreaking technologies. Little did we know that it's our own industry that needs the most disruption because there's zero efficiency and there's, especially for early stage investors, that it's rare liquidity as well. So we think democratizing the private investment space would be the trend for the next 10, 20 years. So starting from Fund 1, we have been purposefully sourcing deals within private innovation space, tailored for either retail investors to better equip them to become more sophisticated investors or to invest in tool sets that helping me as a fund manager, streamline my workflow and sourcing deals, investing deals, exiting deals that in a technology scalable way.
So what's your advice for people investing in startups? What do you tell them to do before they write that check?
Depends on what stage and how deep the pocket is. Before you write any checks, I like to properly address is one, being a good investor or get your foot in the door of a good company is very, very different game than being a good fund manager. So that's one. If you just want to, throw some spray and pray into early stage companies, that's I give you different sets of suggestions. But if you want to become a good fund manager, personally angel check to build track record. Later on, you can build a history so you can raise money from professional LPs. That's a different area. But all in all is, properly assess your own risk taking appetite and matchmaking with the right companies.
Great. And then on the other side of that table, what's your advice for people running startups? What do you tell the founder to do before they go out to raise funding?
I have an interesting analogy is I could give you a very institution, ready answer, but to be more real. And I feel launching a company is really having a baby. One, you need to find a good partner. And you're going to be in this, startup marriage for more than 10 years. Just be prepared. Second, if you're a solo founder, are you ready to be a solo parent to your children? So after that, you need money to raise the children. So do you have the capability to continuously fundraise? After that, your children will go through different life's ups and downs. Are you mentally prepared to have a board of advisors to help you go through those, product pivoting, international market expansion cycles? So I feel it's really no different than raising a child. I don't have a child, but after running my fund like a startup and in contact with more than 5,000 startup founders every year, I feel there's some commonalities among successful founders. But I would say, having grit in this, starting your company for the right purpose, finding a good co-founders, keep a life, a physical and mental balance are the key points. Yeah.
Great. So let's talk more about your investment thesis. Can you give us more detail about it, and in particular, the criteria you use for actually making an investment?
Our investment thesis is all about new fintech economy, because instead of me trying to predict which consumer product, which enterprise SaaS is going to take off, for me is instead of predicting that, I would just use, wherever people spend money is their way of voting. So that's why we call it fintech. Anything that touches money directly, that I will take a deeper look into it. I call it new fintech economy. Now, to break it down, I have three areas to cover. One is alternative asset class. Second is innovation within the private investment space. Third is Web3. So within Oyster Venture, our bread and butter, also what makes us unique as a venture fund is we have purposefully sourcing deals that can help retail investors become more sophisticated investors and help myself to run my fund at a scale. Meaning, if I break down how to run a fund into 7 different steps: fundraising, deal sourcing, due diligence, investing, portfolio success, exiting, and back office, I source deals in every single of the action items. So basically, I'm preparing an investor toolkit to free my own time so I can take a step back and strategize, and then also keep scaling my venture fund. For example, our biggest winner from Fund 1 is a company called Republic, which is the largest crowdfunding platform in North America right now. Very proud. Kendrick did a terrific job of pioneer that front, is democratizing private investment space for retail investors. And we also Fund 2, our largest portfolio, Forge Global, which we consider as a productized exiting strategy, providing they are pre-IPO secondary trading platform, providing liquidity for otherwise founders or early stage execs that wants cash but have to wait 12 years for IPO. So that unique investment thesis has serving us really well, and we're very well put in the top percentile venture funds. So that's our bread and butter investment thesis. Yeah.
Great. And that's a good example there with Republic as well. We know them well, and they're doing a great job. So let's talk about challenges in this space. What do you find is the main challenge that startups face that you work with?
You mean challenges for founders or challenges me as early stage VCs?
Challenges for founders, raising that child you talked about before, growing that business. What do you see as the biggest challenge your founders face?
So I think I would help, if I may, I want to speak at the macro and micro challenge. So I think horizontally, the challenge is the social media as well as mainstream media using 99% of the real estate to cover the 1 percentile successful founders. Therefore, it attract a lot of people coming in to start launching their startup for the wrong reason. Because for them, it's as if there's a one-way ticket to become a billionaire within a short amount of time. So that's the mental challenge. If people coming in for the wrong reason does not have enough patience to see things through, didn't really build enough grit when startup hit the wall. So I felt that's the main challenge. Is doesn't matter how brilliant your product is, you are not mentally ready. Therefore, for me as a VC, I'm scared of giving you money because I'm not the world of Andreessen Horowitz can raise $1 billion. And if you're not successful, guess what? Let me take another check to bet on another founder. So that's my challenge. For I think the biggest challenge me as VC to in front of my founders. Now, for founder self, the challenge is how to keep a balance of entrepreneurship and personal life. So I feel before I was looking for the ones that is young, aggressive, that wants to be successful despite everything. And now these days, maybe I grow as my fund, as I'm at a fund 3. So fund 1 and fund 2, I was looking for that imbalanced lifestyle. Fund 3, I slowly realized, you know what, I wanted to support and encourage founders to have a balanced life, because I think that will boost the longevity of the company. Yeah.
Great. Well, you've talked about several sectors and applications in your investment thesis. If you had to pick one that you think is a really good opportunity for investors to pursue, which one would you put at the top of the list?
Definitely any tool sets that help democratizing private investment space, either is access to different asset class or providing the tools to help them manage their personal investment portfolios. So yeah, I think that's the trend. As if 20 years ago, you were looking for the Robin Hood to help retail investors invest in stocks easier.
Well, in the last few minutes that we have here, what else should we cover that we haven't?
I would say if anyone's interested in launching your own fund, but feel insecure or not confident enough, I want to tell everybody that I'm female solo GP to start with. First generation immigrant, did not go to Harvard, MIT, or Stanford, and none of my family, fourth generation, are investors nor an entrepreneur or venture capitalist. If I can do it, everybody can do it. You just have to put your mind in it, and then you can contact me if you want to launch your fund or want to learn how I build it. I'm an open book.
I'm sure many people will take you up on that. Appreciate you making that offer. So how best for listeners to get back in touch with you?
Easy, just Sophie at oyster.vc.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you, Paul. I really appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.